Welcome to TradeTheMBI.com. This is John. This report is for the 12th of December. And boy, let's just get right to it because we've talked about this before. We had the key level of the 23%, 2668 right there. We had our 2635. I talked to you about the other day that despite the up move, that the market was still in a short configuration except for the rising steel. Still there, but nice drop of the orange given this move and a pop-up here of the green, which is potentially going to show a crossover, which would be enough to turn it around at this point. But it was critical because it's something I always say with even our ABM readings. When you're below that key level, you want to be short. I posted when this was happening at the 2635.50 that they would really want to try and keep price above that because at that algo you would attract new buyers. Secondarily down at that secondary one at the 2600, the 0% before was at 23. We had made that new low and popped all the way back above it and started the market significantly higher. And it continued to make new highs, and then boom, we went right below it. And once that happened, the wheels started to come off the bus, and literally we just plummeted down, got right below that 2635, and then boom, they closed right above it, but it was still struggling right about that area. And you can see right now at 2631, still slightly below it. So not as quite as much pain with the NQ, and we talked about this before, that it had been trading much more elevated, and you can see it's putting in a slightly higher pivot, which is a healthy scenario. If we look at the S&P, it will do the same thing if the red starts to turn around here. So you would have matching lows with higher red DOC. Those are the kind of divergence you look for, particularly as we go into the end, towards the end of the month. Of course, there's the looming prospect of shutdown, blah, 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 which really isn't that significant given the fact that most of the government's been funded anyway. This is just some minor skirmish going into the end year before the House changes hands into the Democrats. That said, let's just flip right to the 5K chart. We don't need to look at the euro. Didn't really do anything. It's just at that same bottom end range. I'll just plop it up just so you can see it real quick. Oil wasn't doing anything, neither were treasuries despite this. So the euro's right within range. But I love marking these because I love to post those for you so you can see, hey, orange dip below, buy signals. We shot up into that pre-market and it just kept going. You had this significant, and I talk about this when it's on the opposite side, when the steel is above cyan in that, in an extended downturn, which we'll show in a minute. Same thing happens when you're in an extended downturn. You might get the same crossover moves that we look at where you have the green coming below, but when the orange is this far away, you're not expecting a whole lot. So because there's not a whole lot further the steel can go down, and as soon as it pops back up, that's going to be the turnaround. So you have to modify what your expectations are on a move like this one as being limited. And it did. It came to the ABM yellow, and I was like, okay, hey, that's a reasonable expectation. However, we still had the bigger 2643, which was the start of the whole run, which is interesting that it was the second bar. A lot of times this very first bar will be the positive extreme. It wasn't the case in this situation. We had the previous one all the way down at 2628, which had been hit plenty of other times because it was very popular to bounce off it the other day. Got up to a new peak here, previous level, 2675, and of course that became the ceiling. You can see how many times we just came right up against it. And at that point, we finally got the shift where the steel moved back above red, and that changed everything because then you're looking at, oh my goodness, lower shakeout, relatively speaking, same highs. That's rarely a good setup. The early move down was pretty clean. Same concept, green comes from below orange, steel crosses cyan. This particular case, cyan actually moved above red for a full DOC spread, and boom, we came down. It ended pretty quick with that steel crossing above the red right there, and that turned around to give a little bit of a pop. Lost my cursor there for a second. And at that point, we produced another cross right down here. This time green was already below red, which helps. It crossed it right at that particular point, and you ended up with your short snake that we talked about, and that led to the nice decline move. So if we scroll across and take a look at what that looks like, you can see that the steel moves above and then remains there. And that lets you know that you're in a continuation. So even when you get little buy dips in that, you know they're not going to survive unless you get that full steel reset, which did not happen. And so all the way from the 66, we knew that we had 43 was the next level. So literally from shorting all the way back over here at the 70 range, we're doing it again at the 66 range, and this time it just doesn't stop. Gets to that point, you produce another one just slightly above it in the 50 range. That breaks down even further. Our expectation at this particular point was, I was still mentioning that, hey, we're headed for the next lower one, and that was right down there at that 28 level, and sure enough, came across, produced the exact same. Green crosses below, cyan rejects the green at that meeting, steel comes below, well, below orange as well as that, cyan with the steel, and also in gold candle below the 50%, and boom, we make new lows. So not a big shocker with that maneuver. And that took us below the 28 right there, and I was posting that the 18 was the next level. We didn't quite get to the 18 there. We stayed pretty flat, put in the buy signal right about there. Even the NBI was reading a little bit better, and then by the second pivot, the P2 came in right about here on the bottom side of it, and that sparked another nice rally, which produced a series of additional positive extremes. Didn't even mark that one, and it's going to be right around the 34 range. And the fighting back and forth through that one, pop back up, and you produce that same crossover. Now, this is a little bit less exciting on this first one because you can see the difference. You don't have green quite moving below red. You do have red already starting to go down. And because cyan's so far underneath red, you're not expecting as big a move. And so you kind of look at the supports and say, okay, hey, I'm already close to the ABM yellow. It's going to have to break through that. If I start to see a turn up, I'm going to have to, exit. What you're really hoping for is a full DOC spread that's really got a strong spike. But with the orange this far up, it was a little bit tougher for that one. And then it produces another clean DOC spread at this point with both green, steel falling, reds falling. Everything was going in just the right direction, and that led to a nice precipitous decline that took place right through there. And then, of course, you don't get no orange, means no joy. And sure enough, right at the end, boom, collapse exactly where? To that same 26, 28, 75 range. So over and over again, it keeps doing the same thing, and I just want to keep pointing it out so that you can see the consistency with which it does this, so that there's no concern about following with those signals. You have to take them. Some of them are going to produce more based on what happens with your relationship with steel. At this particular point, when the steel crossed right there, you might be getting concerned, except for in this case, the green is continuing to fall. It's when that green starts to slide around, you'd be saying, okay, hey, I need to move my stop a little bit above the highs right here. Even if that you continue the ABM green going across, depending on if you turn it off or not, or in this case, following the short stop there. But it broke down one more time, and that led to the next move all the way down, in which case we finally got a little bit of pop from the orange, but you can see hit up against that 50% and just cascaded because didn't quite have that bonus of the orange. Got to have that orange dip. Makes such a difference. So beautiful day, just tons of points up and down and capturing all the right directions with it. So hope you enjoyed it. Those Skype posts I put on there so you can see it. But again, no change in the overall daily there. You know that above that 3550, right in between here is the daily. They're going to try and get back up to that point. We have this 28, and then all the numbers that go down, 18, 13, and then we get into the daily where it was down at the 26 even. And the previous zero was 03, but that 2600 is probably going to be more in line with it. Then we have a whole other set that goes below 2600 should that happen. But I think the potential for bullish turnaround exists. So I'm not afraid to take the long move, because it would be a significant upside move to counter the trade that is extremely bearish, with nothing having really changed dramatically other than just the perception. But then again, market is all about perception. We just have to follow what the algos are doing and trade it as they give it to us. So that's all we can do, is just follow the readings. So as always though, trade well, and I'll keep posting. Have a good one.